It has definitely been one of the most unusual election years ever, and now the 2020 election is here. 7 days from tonight, we will elect a president and go to the polls to possibly change power in Washington. We will see what happens 7 days from tonight, but we welcome you to tonight's election town hall. My name is Scott Inman, along with John Shrewsbury and Janet Walker, all at Gen Wealth Financial Advisors. We thank you for being with us tonight, and here's what our plan is for tonight. You know, it's easy to sign up for this and go, hey, this is going to be about the election, and it's going to be a town hall. But what exactly does that mean? Well, our goal for tonight is not to influence your vote, not to tell you who to vote for president or any other race. We are going to analyze it using Roby Brock from Talk Business and Politics, who you'll hear from in just a moment, to consider potential outcomes and where we stand based on polling. And then we're going to take a look at what those outcomes, potential outcomes, could potentially do or impact, how they could impact the market and the economy. Because John and Janet, really, at the end of the day, what we do every day is try to help people reach financial independence. And that involves an investment strategy, that involves saving money, and that's what we're about here. So we want to see how that's going to affect, potentially, our clients and future clients.
I know our clients are very, I'll say on edge a little bit about all the turmoil leading up to the election with COVID and all of that, and then all of the uncertainty, Janet, that is surrounding any election. But I can't imagine one that has been more tumultuous than this. I thought back in the years when President Obama was on the ballot, it was pretty volatile and pretty uncertain. There was a feeling of uncertainty, but this is unprecedented.
It is. And then, guys, when you look at the financial impact on a personal basis, that's really what we want to talk about is what does this mean for your economy? We talk about the economy a lot, but we believe it's important for you to understand the impact that this could have on your money. And so we believe it's an impactful election. So we want you to be able to understand what's going on, regardless of which side you may determine to vote for. Doesn't matter. Let's just talk through where we are and what things look like at this point.
Scott, as one old reporter to the other, I can remember the days when we were covering elections and it was exciting, and it kind of has that feel a little bit tonight because there's now, 1 week away from election eve, and we may not know who the president is that evening. We may not know for several days who the president might be.
Yeah, and coming from a sports broadcasting background, election night was always my favorite night on the news desk because you had numbers, you had statistics, and you had winners and losers. So it was much like covering sports. So I really enjoyed that. And I also enjoyed catching up with Roby Brock. You know, I got the chance to work with Roby a little bit. His Talk Business and Politics show airs on Channel 7 still to this day. And I had the opportunity to sit down with him earlier today. If I wanted to know, hey, where do we stand with polling? What are the possible outcomes on next Tuesday? He's the go-to guy in Arkansas. There's no question about it. So let's hear now from Roby Brock. Roby, thanks for doing this, first of all. We appreciate your time.
Always good to be with you, and I hadn't seen you in a while, so it's great to sit down and visit with you.
Yeah, it's bringing back a few memories, to say the least, in the distant past, I guess, as it is now. Well, we wanted to get your expert analysis on where we are. You know, tonight's Facebook Live event is really focused on what could happen with potential results, different potential results after next week. We're 1 week out now from the presidential election. Let's start with that one. That's the one everybody wants to talk about, obviously.
It's the one that everyone wants to talk about.
and really, if you look at the polling, a national poll, you could pretty much see that Joe Biden has a pretty good sized lead, but we know the battleground states are where it counts.
Right.
What's your makeup, what's your take on the race as we stand, and is there anything that could shift it in the next 7 days?
Yeah, to answer the second question first, I don't think much is going to shift this race. It's been a pretty steady race the whole time through, and you just haven't seen any wild fluctuations or swings in this race. It's been consistent from a polling perspective. You mentioned the national polls show that Joe Biden has a healthy lead, but the national polls don't matter because it's an electoral college map, and that's what you pick your presidents by. And I think the race is really, really close when you look at the electoral map. If you take every state that President Trump won in 2016 and look at some of the state polling at those levels, you will see that, you know, Wisconsin and Michigan and Arizona are 3 states that really almost every poll we've seen favors Biden by a substantial margin. It's likely that they come off the Trump map. Everything else is still kind of up in the air. Now, you see polls where Biden may be up a little bit or Trump may be up a little bit, but let's just say President Trump holds all of those other states that he won in 2016 and loses those 3 that I mentioned. You have a 269 to 269 tie, which means it goes to the House of Representatives.
Wow.
You talk about some uncertainty then. I mean, it would be unprecedented for us to see something like that happen, but it's a possibility that that happens. For me, the state that I'm keeping my eye on the most on election night is Pennsylvania. That's a state President Trump won by a very narrow margin. The polling in that state has showed Joe Biden with some more leads than you will see from President Trump. And if President Trump can't hold Pennsylvania this time around, and it's an East Coast state to watch, so we'll know some results early on there, then you really, it's a really difficult mathematical path for him to get to 270 if he can't get Pennsylvania. He can win Florida and Georgia and North Carolina, but Pennsylvania is key to his reelection.
That'll be something to watch for sure.
That will be one to watch on election night.
That's what you're going to be watching, you said, right? I heard today that more people have early voted than voted in all of the 2016 election. That's pretty amazing. What does it mean?
That's a good question. I think it means different things in different states. And again, you got to apply that, what it means per state to the Electoral College map. For instance, in Texas, we're seeing with some of these record early voting numbers here, there is a huge youth turnout in Texas, which is unprecedented. Young people vote 8, 10, you're lucky if you get 12% of the vote from people under the age of 30. And those numbers in Texas are far exceeding, they're pushing 20% in some instances. That probably bodes well for Joe Biden and the Democrats, particularly in some congressional races that may be urban or suburban in that respect. And it's what's made Texas a potential state in play. I mean, again, this is one where Biden's been competitive in there. I still don't think he wins that state, but the fact that it's competitive says volumes. Now, here in Arkansas, when we're looking at some of the early voting numbers, you don't see as much in that youth vote there. It's still in that 8% range for what we're seeing in early voting. So we're not seeing a big young vote in Arkansas, despite our big early vote totals here. So it means different things in different states, and you got to look at it through that lens.
So obviously the economy, and I guess more specifically someone's personal economy, you know, the whole line of are you better off now than you were 4 years ago, really rings true a lot of times. In most presidential elections, people look at how they're doing, and that is a big driver of how they're going to vote. 2020 has not been usual in any stretch of the imagination, both economically or anything else.
Yeah.
Is that a factor at all, do you feel like, with votes?
I do. I do still think that, you know, it's the economy stupid, is what James Carville said back in the famous 92 Clinton campaign there. And people do vote with their pocketbook, and they do vote based on their economic circumstances, of which there are more people hurting in this election cycle from a financial perspective than there was 4 years ago. So if that is the litmus test that some people are going to use, it's probably going to not bode well for the incumbent, President Trump. I think the other thing, though, is the coronavirus is just intertwined with the economy right now. I mean, we are stifled because we still have not gotten a grip on the coronavirus and COVID-19. And so I think that is as much of a big driver in people's voting decisions this cycle as the economy has been in the past. But I think just subliminally, it's one and the same thing. I just don't know if people necessarily realize that they're voting for the same thing when they're voting because of the way that the coronavirus pandemic has been handled. It has affected their finances, therefore it's one and the same for them. I just don't know if they separate it that way.
Well, part of the historical track record and even conventional wisdom financially is that the president, in terms of the impact on the market, doesn't necessarily have who the president is. The market could really care less about in some ways, because it's really about who has total control. So let's talk about the possibilities of a Democratic sweep, because that would be impactful, because it could really lead to policy change, legislative changes. The Senate is allegedly in play.
Yep.
What are your thoughts on that flopping from Republican to Democrat?
I think it's actually more competitive as to who wins the U.S. control of the U.S. Senate than maybe even the Electoral College map that I described to you, which again, there's more paths to victory for Biden in that electoral college, but there's a pretty good line of defense for Republicans to hold the Senate too, even though there are some seats that you can pretty much concede are going to go from red to blue. There's one seat in particular that's going to go from blue to red over in Alabama. And so the Democrats have to get a net gain of 4 unless they win the presidency, and then they got to get a net gain of 3. But you're going to lose 1 in Alabama, so now you got to get a net gain. Now you got to get 4 more. And when you just look at the map and where the Democrats are competitive, there's 3 or 4 that are pretty much you can almost put money on that's going to switch from red to blue. But there's about 3 or 4 seats that I could see the Republicans holding, even though they're very competitive with the Democrats. So I feel like I'm not dodging your question. I just think it is, I really wouldn't be surprised to see 50-50. I wouldn't be surprised to see 51-49 with the Democrats maybe having the 51. It's a little bit harder to see Republicans keeping 51, but it's still mathematically possible. But it's a really, really close competitive Senate race for control, and I just don't think that it's going to be something that we're going to know all the answers to on election night, primarily because in Georgia, they have 2 U.S. Senate seats that are up this time, and they're both going to go to runoffs. So, and Democrats are competing in that state, and so we may not know the outcome of the U.S. Senate on election night. It may be 2 to 3 weeks later when they have their runoff campaigns.
Wow.
Who's going to control the U.S. Senate? So that one to me is really about, if you had to look at a crystal ball, it's the cloudiest, it's the murkiest to try to figure out. I think the Democrats hold the House. I don't think that that's really going to be much in question. They may lose a little bit, they may gain a little bit, but I think it's relatively the same. And then obviously the presidency is the big kahuna.
Well, if the House doesn't flip, then maybe economically and market-wise there's not a big impact, but I do want to get your take on really the closely most contested race in Arkansas. And that's District 2, between French Hill and Joyce Elliott. That's a very tight race. What's your polling saying there?
It is a tight race. We've got it almost a statistical tie, and it has been close since Labor Day when we first polled it. We were kind of surprised to see the numbers as tight as they were. Joyce Elliott is benefiting from what we see a lot of other Democrats nationally benefiting from, in that female voters have been rejecting Donald Trump's politics or personality, whichever it is, by pretty big margins. There's a huge gender gap in that race. Men much more supportive of French Hill, women much more supportive of Joyce Elliott. More women vote than men vote. It's about 52-48, female to male. So she's been benefiting from that. She's done a little bit better in Saline County, Faulkner County, and White County, which are the 3 outside of Pulaski County territories that you have to do well in. She's still getting trounced in those counties, but not as bad as Democrats have been in our polling. Now, whether that reflects on Election Day is a whole nother conversation. And then she's got to run up the score in Pulaski County to beat French Hill. So she's got to get north of 60% of the vote, Pulaski County, which is a really high hurdle. So I think this race is competitive. It has been. You can't watch TV or listen to the radio and not understand that it's been competitive. But I think that the fundamentals in the race still favor French Hill slightly. There's more growth in Saline and Faulkner County than there has been in Pulaski County, so there's going to be some new voters come to the table in those counties that are probably going to lean a little bit more Republican than they are Democrat. So it's a tough one to call, but I feel like Joyce Elliott has run a pretty perfect campaign and is pretty positioned to pull an upset. But I still think French Hill fundamentally, because of the way the district's constructed, has a very, very slight advantage. Will not be surprised to see this race be 50.5% to 49.5%. Wow. It could be that close.
All right, so as we wrap up all these numbers you've given me, the potential of an electoral college tie, the potential of runoffs and not knowing who's going to win the Senate, the next thing that markets don't like is uncertainty. Could this thing get dragged out because of the results being so close, or because of all the mail-in and are we going to have a contested election? I mean, what's your take on that?
Or even the president saying he's going to, not be satisfied with whatever the results are. Even if he wins, he might not be satisfied. So, I do think there's going to be. I do think there's going to be some element of uncertainty. I'm not so sure that the financial markets haven't kind of baked that in already, that it's going to be some uncertain times. So there may be a little bit of preventive defense there of, we know that it's going to be contested. We know there's going to be some uncertainty about it. Let's sit tight and not make any rash decisions. You may see some of that happen. But yeah, you're right. The markets don't like uncertainty, and there's going to be some after election night, I'm afraid. Whether it's control of the Senate or who the president is, or maybe some local races might give some people some uncertainty. But, look, it'll all get sorted out eventually. I am an optimist at heart, and I do believe that better angels will always prevail. So I am not one of these gloom and doom people are going to take to the streets and riot. I just think we're a little bit more civilized than that. And I think that whoever might be dissatisfied with the outcome, it's going to be done in a pretty professional and peaceful way.
Well, Roby, we appreciate the time. Where are you going to be on election night?
I'm going to be in the KATV headquarters.
That's what I figured.
Apparently on the bench.
Yeah.
Down there. We'll be doing a bunch of cut-ins and doing some stuff through Facebook. So we'll be around a lot on election night, just offering some analysis. And I think in Arkansas we'll see some early returns come in. I think President Trump wins Arkansas handily. I think Tom Cotton wins his re-election bid by a comfortable margin. I think those races get called about 5 minutes after the polls close on election night. And then I think we're in for a really long wait on what happens with Congressional District 2, maybe till the 10 o'clock news that you used to anchor. So.
Yeah, it was always my favorite night, election night, and enjoyed being back with you today. And once again, thanks for your time.
You bet.
Our thanks to Roby Brock. If you want to know the best about polling, the in-depth look at what's going on, he's the guy who's got his finger on all of that. So I appreciate his time for joining us. But, if there's anything, I learned a lot talking to him today. But if there's anything I took away from John and Janet, it's that I think the headline here is Election Day is November 3rd. We may not know much on November 4th.
Well, I think that really is something that we want to zero in on tonight, Scott, because I believe personally that we could see between now and the end of the year somewhere in the 5 to 10% decline in the market, simply because we're trying to sort all this out, and it is so close. And I think our listeners and our viewers need to be prepared for some volatility.
Yeah, I mean, Roby clearly said on a national level, really the only thing that we know is that the Democrats will hold the House. And so tonight when we go through the different scenarios, one of them that you'll see that we've omitted is a complete Republican sweep. It's because we feel like that's, very unlikely, and so we can set that one aside. But in every other category, there's a significant amount of uncertainty at this point.
Yeah, absolutely. And I think as we move through some of the data tonight and begin to talk about some of the facts of the election, you'll clearly see that this is not pivoting on a one-day event. It is over the course of time.
Mm-hmm. We do want to take a minute to encourage you to leave your comments tonight on Facebook, but we also want to offer this warning that we are monitoring those comments. So if they get unruly, if they get negative, if they get accusatory, we're not here to have a political debate. Let's put it that way. But certainly we encourage anything that you'd like to comment on the Facebook comment section. So,
and Scott, particularly questions. If they have questions, we would love to field your questions and try to answer them as best as possible, because we do know that there is a lot of concern about what's going to happen with your retirement, your investments, your money, as it pertains to the election.
So let's take a look at some stats. Historically speaking, do financial markets perform better under Democrats or Republicans? Well, take a look at this sample, and we should point out that it is beginning in 1972, so it's not the history of American presidents. But if you go back to 1972, the data doesn't quite support the common wisdom, I would assume that a lot of folks have, that a Republican presidency is better for financial markets than a Democratic one. As you take a look at the S&P 500 return, with the president being Republican, that return has been about 5.5% annually since 1972 through this year. And a Democratic president, it's been a whopping 12.7.
Guys, you got equities on one side of the equation there, but if we go ahead and talk about interest rates, you'll see the opposite impact going on. So bond yields tend to fall, causing bond prices to rise during Republican presidencies.
And I think, Scott, it's worth pointing out that could be one of the out of the blue things that people might not expect. So let's go to school for just a second on interest rates and the effect on a bond portfolio, maybe a bond portfolio that you have in your 401k plan or in your IRA. When interest rates move up, bond prices go down. And so as you see historically, either a split Congress or a Democrat-controlled presidency has historically been favorable to a rise in interest rates. Mm-hmm. And right now, where we are, Janet, a rise in interest rates off the bottom of less than 1% on the 10-year, a 0.25% rise is a pretty significant rise, and that can have a negative effect on someone's bond portfolio.
Yeah, I mean, 0.25%, when you look at that at, singularly, it doesn't sound like that much, but relative to where we are, it's significant for you at this point.
Absolutely.
So what are the big issues? And we talk about issues not from a voter perspective necessarily, but from a financial market perspective. What are investors, the economy, what are they concerned about as we move into the 2020 election results? We've identified 3 for you, and history is not indicative of future results, but we're identifying these 3 issues important to the markets this election season. Taxes. And there are very distinct differences in what a Trump presidency and a Biden presidency, along with a potential Democratic-controlled Congress, would do about that, from their own words, by the way. The regulatory climate, we're going to talk about that. And then U.S.-China relations. That, of course, dramatically different depending on who wins the presidency. At a high level, John, the Democratic agenda for 2020 certainly envisions a marked change in all 3 of these issues.
You're absolutely right about that, and it doesn't take a rocket scientist to figure that out. All you have to do is just listen very faintly, and you'll figure that out. But let's dive into some details here. When it comes to taxes, President Trump would maintain the corporate tax rate at 21%, and he would potentially also lower the personal and the capital gain tax rates. He's talked about doing that. There is no solid proposal on the table for that, but that is how Trump would approach taxes in a second term. Joe Biden has been very clear that he wants to raise corporate income taxes to 28%, up from 21% as they are now, and also to create a 15% minimum tax. Of course, Joe Biden is very fond of talking about corporations that don't pay their fair share, and points out that some corporations, because of deductions and what have you, are able to make a lot of money and not pay any taxes on it. And so that's where that 15% minimum tax would kick in on the basic corporate tax structure. Also, Biden would restore the personal tax rates to prior higher levels, potentially change the capital gain taxes, and impose a wealth tax.
We didn't talk there about how he would potentially change the capital gains taxes, but there is talk about that being comparable to your income tax rate. So right now, if you have long-term capital gains, you pay that at a lower rate than you do your ordinary income tax. But if it's all on the same level, then you're looking at a higher rate on that.
Obviously, when it comes to regulatory control and the regulatory climate, President Trump, when he came into office, cut a lot of regulations, and he would continue his deregulatory agenda for energy independence and continue the current deregulatory agenda for finance. And there'd be little change, Janet, in the current stance on healthcare and on big technology companies.
Really, a lot of what we're talking about with Trump is a continuation of his thought process. So with Biden, let's talk about the regulatory climate. He would reverse a lot of the deregulatory trends that the Trump years have brought us and increase antitrust scrutiny on big tech, enhance the Affordable Care Act via the public option, and allow Medicare to negotiate drug prices. We don't have this in here, but also allowing Medicare access at age 60 is on the Biden agenda. Increase support for green energy, and he would also like to raise the minimum wage.
Guys, I think that whoever wins the presidency is probably it's probably not a good year coming up for big tech. There's been a lot of scrutiny on the practices, particularly of Facebook and Twitter, when it comes to censoring various news organizations and things of that nature, and canceling out tweets and what have you. And there's a big push in Congress on both sides of the aisle to bring big tech to the Congress and have them actually maybe even lose some of the regulatory exemptions that they operate under right now.
Let's talk about the U.S. and China relationship, guys. Obviously, Trump has been in the news, for the whole time he's been in office, really, in this arena. He would focus pressure on China primarily through economic financial means. In deterioration of the economic relationship with China, we would expect that really to continue, and including potentially imposing new tariffs. And then on the Biden side, John?
Well, Joe Biden says that he would work through multilateral channels to basically restore some of the trade that was China and actually just build better relations with China. Obviously, Trump has carried a stick, and Biden would have maybe some honey or something of that nature that he would go to the Chinese with. But that would be something that I think he would obviously do in terms of just his posture with China. But he would also increase pressure on China along with multiple fronts, including the issue of human rights, environmental standards, and labor considerations. All of those things are kind of wheelhouse Democrat issues, and certainly he would ramp up the conversation and the pressure on those issues and probably peel back a little bit on the trade issue.
All right, so those are the stances of the presidential candidates themselves, but of course they'll need Congress to enact a lot of the policies. So now we're going to kind of transition to what we're calling the three most likely outcomes of the 2020 election, and I think Roby really backed that up during his interview. There is, of course, the possibility of a Republican sweep. That is not one of the outcome that we're talking about here, just for the sake of time and from what the experts are telling us. So the three most likely outcomes, we would say, would be either a Democratic sweep, meaning Joe Biden wins the presidency and the Senate flips, the Democratic presidency, but still a split Congress, meaning the Republicans maintain control of the Senate, or the Republican presidency without a congressional majority. All right, so let's take the first one. And I thought it was very interesting, too, when Roby was talking through that. You forget about the fact that if you have a 50-50 Senate, then who is the vice president matters as well, because that is where the control of the Senate hinges. So if there is a Democratic sweep, that's our outcome number one, what outcomes would we expect from a financial or economic perspective?
Guys, I really think this first point, when we talk about the impact on individuals and what this means to you, I think that this one is a point that you need to understand. If we get a Democratic sweep, then we are looking at a significant probability of higher corporate, individual, and capital gains taxes. So of what you earn, of what the business that pays you, whether it's yours or somebody else's, of what that business earns, they will be able to keep less of it. And what does that do for you ultimately?
And I think you will see a return to a bit of an Obama-era regulatory posture. There were tons and tons of regulations that were rolled back by President Trump by executive order and some by congressional act, but he was very effective at cutting regulation, and that had the effect of actually giving a boost to the stock market, giving a boost to the economy, and that type of thing. I think you would see a retrenchment of that, Scott, in a Democratic sweep without question. There's a lot of what I would call pent-up frustration on the Democrat side right now. They have just last night they had the whole issue with the Supreme Court come to fruition. They were fighting that as best they could, but obviously the numbers were on the Republican side, so they're frustrated about that. They've been frustrated by a lot of things that Trump has done, and so they're going to be running if they have a Democratic sweep. They're going to be running trying to change things as quickly as they possibly can, simply because they got to make hay while the sun shines, and it's very rare when you have all three of the president and the houses of Congress, all three of those in one party. And so when that happens, they're going to be on it like crazy.
Well, there's no question that if higher corporate and individual and capital gains taxes come to fruition, that is going to be a major headwind for equities in general, broadly speaking. But what about some sectors? When you think about more regulation, do you think about energy? You think about financial sector, even more big tech risks there being a headwind for those sectors. And then the healthcare sector, if drug pricing and Medicare for all, which is some of the Democratic principles too, that would certainly be a challenge to the healthcare sector, although those policies would likely be watered down in any actual legislation.
Scott, I've been paying really close attention to this whole controversy about what Joe Biden would do with oil. You know, in the last debate, he kind of got himself in a corner a little bit about the oil issue because he said that he was going to phase out big oil essentially, and there are video clips, despite him basically goading President Trump to put it on his website. They did. There are video clips of him saying that he wants to get rid of fracking. And then he says, I don't want to get rid of fracking. And so it really has big oil in a turmoil. But Joe Biden, on the other side of the coin, Joe Biden is saying, hey, look, it's not just about getting rid of jobs in big oil. It's about creating jobs with alternative energy. Now, it remains to be seen whether or not alternative energy jobs will actually come to fruition. There's been a massive amount of history that shows that that's very fitful, start and stop as far as the creation of jobs in the alternative energy space is concerned. Nothing on a massive scale that the traditional energy companies can possibly churn out. But it will be interesting to see if he, number one, gets elected, and number two, can put those policies in place. Guys, I think that's probably one of the big issues, particularly in the areas of South Arkansas and North Louisiana, where our offices are located. A lot of people make their living on the oil industry.
And I don't think that this is one that we focus quite so much on when we get to a Republican president possibility in our topics tonight. So let's go ahead and just draw that comparison. With a Democratic presidency and a Democratic sweep, then lots of energy changes really for greener energy.
Yes.
Where with Trump, what you're looking at is more independent energy. It doesn't have to be greener. It just has to be more independent, where we are not dependent upon other nations for very much of it at all, that we can stand more independently in that arena. So, as you mentioned, John, based on the territory that we cover, for some of you, this is a big topic personally just because of where you live.
All right, let's move to outcome number two. And outcome number two is, what if the Democratic presidency happens, but the Congress stays split? Again, remember, we are assuming that the Democrats will continue control of the House following the election on November 3rd, but the Senate, currently controlled by the Republicans, is in place. So let's assume in outcome number two that the Republicans hold the majority in the Senate, but Joe Biden wins the presidency. So what would be different about that?
Well, when you think about this scenario, the word that comes to my mind is stalemate. Mm-hmm. You've got a kind of a stalemate between a president who has an agenda and one sector of Congress, one house of the Congress, basically just bowing their neck and saying, no, we're not going to do that. And so that has happened, obviously, with the House, with some of the Trump initiatives. We see that even with the COVID-19 and the aid that President Trump has wanted to get passed through the Congress as far as relief for COVID-19, unemployment and things of that nature, that's gotten bogged down.
Yeah.
And of course you could say, well, it's the Democrats or Republicans that are bogging it down. Nonetheless, it's bogged down. And when you see a stalemate like this, people don't really like it because nothing is getting done, but the markets really love it because it's stasis. It is, okay, we know that not much is going to change. And so we could see the markets actually enjoy a stalemate if we have a split Congress and either a Democrat or a Republican president.
So let's talk through some of the specifics here. We wouldn't really expect to see the significant tax changes that we would have under a Democratic sweep if we have Democratic presidency with a split Congress, because, again, not getting the support that the president would want to make those sweeping changes. More regulation, we do believe, would continue along with Biden's, thought process on that. John?
Yeah, and that's interesting that, regulation, you think about it being passed by Congress. Well, we have a system in Washington now that we have a bureaucracy that passes regulation just because they want to pass it. There's I remember the fiduciary rule that was under President Obama. It never went through Congress. It actually was something that the Labor Department promulgated and eventually got shot down in the courts. But we have people in the bureaucracy of Congress of Washington D.C. rather, that basically can pass regulation because they think it's a good idea, and that's where an administration can kind of control things and bypass a Congress that may be gridlocked in a stalemate type situation, Scott.
One of the other things, guys, I think where you see some of these things come to fruition that the president might want and the House might want, but the Senate might not if the Senate is Republican. What we've seen in the past, we saw this with changes to Social Security a few years ago. It was, a line item basically in the budget deal. And so it was, hey, if you're going to get the budget through, then you're going to approve this because it's part of it. And so I am certain that there will be some things that get slipped through in that way, just like they have in the past under different presidencies. That's just kind of the way Washington works.
Well, you mentioned that bureaucracy. There's also the use of executive orders that could still give the president a little more of a tilt in terms of getting some of his agenda through without Congress. All right, so those are the first two. Let's go to outcome number 3, and that would be a Republican presidency. That means Donald Trump wins re-election without a congressional majority. So that would either be the House is still Democrat and the Senate is still Republican, which makes a difference as well, or it could be that the Senate switches and goes Democrat. But you do still have a status quo there, much akin to when we talked about in outcome 2, except for you'd really see no changes to taxes, probably less regulation because the executive order would not be used to increase regulation.
Scott, I think that this really is the one that the markets and the financial structure of the country would be the most comfortable with. I think that they would say, okay, nobody's going to come and impose more heavy regulations on the financial industry. We're going to be in pretty good shape with that. They would say, from a business standpoint, we're not going to get something that's going to be harmful to business because the president won't sign legislation along those lines. And he's certainly not going to use his executive powers to try to do things negatively toward business. And so from a financial standpoint, and as that relates to your 401k plan, your IRAs and things of that nature, the Republican presidency without a congressional majority could be kind of a Goldilocks type situation for the markets. It's not going to say a whole lot about, hope and change or anything of that nature, but it is certainly going to be something that I think would be favorable to the financial markets.
Guys, one of the things that I just keep coming back to that I think is a fundamental difference between the two is the impact on taxes and the impact that will have on individuals, because anytime that we talk about free something, whatever it might be, frankly, even all the assistance that was passed, this year because of coronavirus, even under a Republican presidency, those types of things have to be paid for at some point. And so when you talk about, with Biden, when you talk about things like free community college for 2 years for everybody in the country, well, free doesn't mean free. It means that it has to be paid for somehow, and that's why they're looking at the changes in capital gains tax rates and in individual and corporate tax rates. And so we've just got to look at what does this mean for you on an individual basis.
I think it would be important too to point out that some of that change would take time.
Yes.
Any of the changes we're talking about to legislation, there would certainly be time to prepare for that. But what does all of this mean for you from an investment standpoint, from a retirement standpoint? That's how we want to close tonight's election town hall, because ultimately the so what is really the most important reason we're on tonight. And when I think about what does it mean for me, I go back to the first place we need to start is where we came out of the Roby Brock interview and talked about we may not know much more on November 4th than we do on November 3rd. This could drag out, and that means market volatility. And I think it's very important, John, that people are prepared for the market swings that we believe are coming.
I wish I had went back and read again this poem that I read a number of years ago. But basically, the gist of the poem was that when all the world is losing its mind, the guy that can keep his is the guy that really comes out best. And I think that really is where I'm going to settle on the advice that we want to give tonight is, regardless of what happens in the next week, 2 weeks, 3 weeks, or even a couple of months, this too shall pass. One of the wisest ladies that I ever worked with, when I was very young in the media profession, I would come in and I'd be all worked up about something, and she'd just look at me and she'd go, "John, this too shall pass."
Yeah.
And it will. This too shall pass. It will all work itself out. Scott, you pointed out earlier in the program that it is very likely that it's going to take time for any initiative that any president or any congressional body tries to get going. It's going to take time for that to actually make its way through the channels and change things. You're going to see some initial reactions in the market, particularly if there's a change in the presidency or if there's a lot of uncertainty about whether the presidency is being decided or not.
I think it's important, really, that the message that we have continued to send over the years is that, stay the course. Stay with what your plan is. So if you're an accumulator and the market's going nuts, you know what? You don't need that money tomorrow. You don't even need it next year. Just let it do its thing. And I think, don't just react. Like if the market goes down because we don't have an answer on the presidential election, don't pull out in a panic. Don't let your emotions make the decision. Leave it in there. It's going to come back up. Just give it time. And regardless of who wins, it's going to come back up. Just give it time. Stay the course. If you are at the precipice of retirement, then it's important for you to understand what's going on, in your individualized plan and whether or not you need to do anything to be prepared for times like that.
Guys, we've got a question from Paul Douglas who messaged in on Facebook. He said, "What about the wealth tax?" And I think that for the most part, the question is, what is wealthy? And I will tell you that Joe Biden has a lot of his targets on incomes of over $400,000 a year and over $1 million a year. There is just a general sense that there is not enough taxes being paid by the wealthy. Now, you can make an argument that the wealthy pay the vast majority of taxes, and statistically that's true. But the question becomes, are they paying their fair share? And that's where you would see taxes come into play on capital gains, on a raise in income tax. But this wealth tax is something that it was actually floated out, if I'm remembering right, Scott, that was floated out by Elizabeth Warren, that basically said that they were going to tax accumulated wealth at about a 2% level just because you had it. And not that because you made it, but because you had it, they were going to actually tax wealth, accumulated wealth, at about a 2% level. I don't know that has any traction, but I do think it does bear watching, particularly if there is a blue sweep to the elections that are going on right now.
One of the other taxes we didn't even talk about today is a potential change to the estate tax. If Biden were to be elected, that's something that's on his agenda. Right now, that's over an $11 million marker for the estate tax to kick in. That's set to sunset a few years down the road, where it would go back to a $5 million marker, but he says that he wants to return it to the norms, and we don't know if that's the norms of $5 million or of $3.5 million, which it was previously, but definitely a hastened lowering of that amount. And when you think about the fact that life insurance and the value of your home or any land, when all of that is included in your estate, then that includes more people than you would think that it would include in the state of Arkansas.
It's not just limousine riding rich fat cats that pay an estate tax. I will tell you that is not the case. There's a lot of what I call millionaires next door that would pay the estate tax, or their families would pay the estate tax at their death. Seth. Guys, we've got another question come in from Laura Murphy Beck. She said, we plan to open new Roth IRAs. Should we wait until after the election to make a more informed decision, Janet?
I would say start where you are. If you're opening a new account, first of all, it's not going to be a massive amount of money, whether you start with your annual contribution or your monthly amount. You're talking about a few $100s or a few thousand. You're not talking about, 10 or 20 or 30,000. And so let it do its thing. I would say the time to invest, whether we're talking about right before an election, right after, whenever, the time to invest is always now. It is always now, because when you look at, the market may go down a little bit, but if you're invested in something that's going to pay you dividends while you wait, then you get additional shares while you're waiting on the sideline. And frankly, if you have the money to do it with, now's the time. It's just the discipline of investing. But we would encourage you, if you're entirely new to investing, the concept of dollar cost averaging can be very important for you. And that is this concept of, instead of, let's say it's going to be $5,000 in a year's time, instead of doing that, you put in, $458, guys, I think a month. You put in that monthly amount to be able to buy the shares at whatever value they might be. So if the share price of whatever you're buying is up, you're going to buy fewer shares. If it's down, then you're going to buy more shares. And so over time, that works to your advantage. So that is a consideration if you're opening a new account at this point.
Janet, I think what we've got to go back to in any discussion about this is, what's the plan? You have to ask yourself, what's my plan? Now, if you don't have a plan, there's your first problem. It's a bigger problem than whatever may come from the election results. If you don't have a plan, you don't know where you're going, and you're not going to know when you get there. And so you've got to have a plan going on as far as your finances are concerned. And so we believe that there is a great value in sitting down and actually having a plan about what you're doing. Because just for clarity's sake, Scott, let's talk a little bit about the plan that our clients have with the Income for Life model and the Gen Wealth Ready to Retire process. It is for such a time as this that plan is put together, because the plan is very detailed in its allocations. We have a strategy in place that basically protects against volatility. If you get a lot of inflation as a result of the policies of one administration or another, you've got a plan that actually does adjust income for inflation into the future. So there are a lot of things that you can prepare for, knowing that there is a dark cloud out there somewhere, and you've got to be prepared when that dark cloud does show up.
Guys, we got another question. This is from Chuck. He says, any advice for federal retirees as far as investments go? Should we stay in the G fund or diversify? So what he's talking about there is federal employees have access to their version of a 401k called TSP, or Thrift Savings Plan, and their G fund is government security. So it's a very conservative holding. So John, how would you address that?
Well, first of all, there's a lot there that we don't know. We don't know what Chuck's age is or anything of that nature, but I would say that the number one thing, Chuck, you want to do is be diversified. And clearly, if you have more time to accumulate money, then a downturn in the market, a short-term downturn in the market, is actually your friend. Volatility is your friend if you are accumulating dollars in your retirement account and you have some time to let that work out. Time has the propensity to heal almost every wound that you might ever get in the stock market. So again, I don't know whether Chuck is young or old, but if Chuck is young, then I would just be very diversified, and I would be dollar cost averaging into that plan. Now, Chuck, if you are near retirement, then you probably need to be thinking about how you prepare your portfolio for retirement. And that's something that you could speak with a Gen Wealth advisor about. If you're over 59 and a half, you've got a special opportunity to actually diversify that account in such a way that you're preparing yourself to take income into the future and not be in a situation where you've got all your money invested in the market and you get hit in what we call that retirement red zone, Janet, where you're very close close in proximity to retirement, but you hit a downturn in the market and it really does set you back.
Yeah.
John, let's define, I was just going to say, just to jump in real quick, let's define what near retirement is for us from a planning perspective.
I would say definitely within 5 years, but really we look at that 5 to 10 years out. And honestly, most people aren't planning that far out. They're putting money into their retirement plan at work, but they are not planning their retirement that far out. And it's time. If you don't already have a plan, the question is, are you on track? Are you ahead? Are you behind? If you don't know, then it's time to get a plan in place for you. Scott, how do they go about that process?
To begin the process of planning at Gen Wealth, you can reach out to us in one of a couple of ways. You can actually, if you feel like you've done a little planning, but we could maybe help determine your probability of a successful retirement, we have a concept called the 15-minute phone call, 15minuteretirement.com. There is a link in the chat that you can click on and just spend a few minutes with a Gen Wealth advisor to determine your probability of success in retirement. That's one way to do it. But if you don't have a plan, if you've never put a financial plan on paper on purpose, the step there would be to either reach out via the phone at 501-653-7355, or you can email us info@getreadyforthefuture.com, or you can just tell us you want to reach out on the chat there as well, and we can get in contact with you a different way as well. But I would say those are the top two ways to kind of just get a checkup if you already have a plan, or to begin the planning process if you have never started.
Scott, Chuck actually messaged again, says he's presently retired. And what I would say to you, Chuck, is that if you are in the G fund, that is a very low risk, but it's also a very low return fund based on where interest rates are right now. And what you would have if you remain in the G fund is a risk of inflation, an inflationary challenge. The G fund is likely to not keep pace with inflation and get you ahead of inflation. And so that is something that it bears talking about with a financial advisor. Conversely, I would say that if you are in other investments, if you are in equity investments and retired, then you have what we call a sequence risk. If you have a downturn in the market, then you could be in a situation, if you're withdrawing money from this TSP program, you could actually be selling more shares than you really should, and be in a situation where there is at least the threat of depletion of your portfolio in a down market. And of course, all of that really depends on a lot of different factors. My best advice, Chuck, would be to give us a call and sit down with a Gen Wealth advisor and talk through this and get a ready to retire plan. You're already retired. Your money needs to be ready to retire as well.
Hey, Scott, if our viewers this evening have enjoyed the information and the education, how else can they continue to learn through Gen Wealth?
Well, that was what I was going to say, because we're going to take a quick nap after this, and we're going to be right back here in these positions tomorrow morning at 11:30. That is when we do our live stream of the Get Ready for the Future show, which is also heard on radio stations across Arkansas at 10 a.m., on the Buzz 103.7 and also on 102.9. Been there for years, but we record it live on Wednesday morning. So you can watch it at 11:30 on Wednesday, or you can watch it later on Facebook, or you can listen to the radio broadcast at 10 o'clock on one of those two radio stations.
Scott, if you are watching on Facebook tonight and you want to take part in that 15-minute retirement, Aaron has posted a link in the chat that you can actually go to 15minuteretirement.com and sign up for the free no-obligation checkup. We can do that for you even over the phone, and there's some really good insight that you can get from the 15-minute retirement program.
Well, that's going to do it for tonight's Election Town Hall. We want to thank you all for watching. We thank Roby Brock once again for joining us, to giving us some pre-election insight there. You know, and I think I would say, and I think you guys would back this up too, that the markets historically have been resilient. So any change is going to be temporary in nature. We believe that the American economy will thrive in the long term. So this is a short-term discussion of the next few months and what maybe you should be prepared for. But again, I go back to, if you're nearing retirement, you need to make sure that your investment strategy and your overall income plan is positioned for the volatility that we believe is coming.
Scott, I got one more question.
Yeah,
Go ahead.
This comes in from Jack. He said, you address those who are accumulating, those on the precipice of retirement. What about those who are already retired and already a client of GenWealth. If you're already a client of GenWealth, you're probably in a really good position. I think I'd just pick up the phone, call your advisor, and say, hey, let's talk a little bit about where I'm at relative to the election and what have you. We're having those conversations on a regular basis. And so certainly pick up the phone, give us a call. That's why you have a financial advisor, is someone to come alongside you, partner with you in this effort to be sure that you stay retired and that you're in really good shape. And that, obviously that's something that you need to have a conversation with your GenWealth advisor about.
Really, I would say, though, just so you don't all feel the need to go, oh my gosh, is it okay? He said, call my person. And you're more than welcome to do that. But if you've already got your assets in buckets according to the plan, that plan was built for election years. It was built for the 2008s. It was built for the uglies. So if you already have done that, that's where you need to be.
Let me say that there is no investment strategy that guarantees success. We have no idea what's coming down the pike. Mm-hmm. There is no investment strategy that guarantees success. But what you want to do is you want to try to stack all the cards in your favor, because cards are being dealt. Clearly, they're being dealt with politics, with things like COVID-19 that we have absolutely no control over. You got to get your cards stacked all in your favor. And that's what having a plan does, Scott. That is the purpose of having a plan, is to be sure that as best as you have control of, that you've done all the right things that you can do to be prepared.
Well, our goal was to not go longer than an hour. So kudos to John and Janet for that. We are right up against the top of the hour, so we're going to wrap it up now unless there's one final question, going once, going twice. We thank you for watching the Election Town Hall, and we hope you'll join us for the Get Ready for the Future show on Facebook Live tomorrow morning at 11:30. Good night.